Hi everyone, we are continuing our video series on the MCQ discussion relating to questions that can appear at your CDCS exams or the IBSL exams. So let's get into our video. If you want to see our previous video where we covered nearly 15 MCQ questions, the link is mentioned in the description. Do check it out. So let's start the video for today. So here we are continuing with question number 16. Question number 16 asks you, which of the following statements is correct when an assignment of proceeds has been effected under a documentary credit issued in accordance with UCP 600? Here, there are four answers given to you. Let's see them. The assignee must present complying documents to receive payment. Now, clearly, the article that they are testing here is Article 39. And there we clearly know the beneficiary can assign the proceeds to another person. It's not the rights under the credit, but it's the proceeds that is being assigned. This new person to whom the proceeds is assigned is whom we are referring to as assignee. The assignee need not present any documents in order to receive payment. So here the answer says the assignee must present complying documents. So that itself shows you that answer A is wrong. Moving to answer B. The assignee will receive payment of the proceeds directly from the applicant. Sorry, no. The applicant doesn't directly pay to the assignee. That is not how it works here. So, of course, that is also not the correct answer. Answer C. The value of the documentary credit is reduced by the amount of the assignment. Now, since you're assigning the proceeds to somebody else, it doesn't mean the value that the LC is open for is going to be reduced by that amount. It doesn't work. So, of course, the answer C is also incorrect, which will ultimately tell you D should be the correct answer. But let's have a read. The beneficiary has assigned its rights to the stated amount of proceeds to the assignee. So, of course, that is the clear correct answer because, yes, Article 39 tells us it is the right to the proceeds that is being assigned and this is assigned by the beneficiary. So, here the correct answer is answer D. The beneficiary has assigned its rights to the stated amount of proceeds to the assignee. Let's move on to the next question. Question number 17. An applicant has given its counter indemnity to its bankers in connection with a delivery order. Which of the following statements would not be included? Now, please keep in mind they're saying what statement will not qualify as a counter indemnity. What would not be included? So here the first answer says, the applicant indemnifies the bank against all actions, damages and cost. So yes, that is of course a counter indemnity that an applicant could give in connection to an LC, especially with relating to a delivery order to their bankers. So answer A is a possible statement that can be included in the counter indemnity. So it's not the correct answer here. Answer B says, the applicant undertakes to accept the underlying documents irrespective of discrepancies. Yes, this can also be a statement that can be included in a counter indemnity where the applicant can waive off the discrepancies and undertake to accept the documents irrespective of the discrepancies. So B is also not the correct answer here. Answer C says the applicant gives the issuing bank the authority to debit its account for the full value pending inspection of the goods. Now, do you remember Article 5 of UCP 600 which we discussed? There we say the banks only deal with documents. They're not involved with the goods to which the credit relate to. So, of course, they will not be holding on to debit the account until the applicant goes and inspect the goods. That cannot be a statement which can be included in the counter indemnity at any cost. So C seems to be the correct answer here. But let's move on. Let's read answer D as well. The applicant undertakes that should the goods form part of a larger consignment, it will accept that consignment and pay the full value. Yes, this is also allowed as a statement for it to be considered as a counter indemnity to the banks. Why? If the goods form a larger part of the consignment, of course, if the applicant is willing to accept it, they can indemnify the banker to go ahead and accept the documents. So, out of the four answers given here, clear. So, out of the four answers given here, the correct answer to this question, which asks you which of the following statements would not be included in a counter indemnity, is statement C. A documentary credit is issued for an amount of sterling pounds 60,000 and calls for drafts to be drawn at 30 days from bill of lading date. Documents have been presented with a bill of lading date 9th November. Which of the following tenors on the draft will not be accepted? So let's first see what tenors that we can accept, and then of course that will lead us to a tenor that we can't accept. So the correct tenor that should have been in the draft is 30 days from the given bill of lading date, which is 9th November. Of course, it will be 9th December. So answer A clearly says 9th December. So that tenor we can accept if that is what is mentioned on the draft. Answer B says 30 days from bill of lading date. Now on the draft, when it says 30 days from bill of lading date, there is some ambiguity there where we don't know what is the bill of lading date. So B seems to be a questionable tenor to mention in the draft. Let's see why it's so a little bit more detail once we look at the other two answers. Answer C says 30 days after 9th November. Now that can be acceptable as well because of course the bill of lading date is 9th November. The draft clearly mentions it. Answer D says 30 days date. Draft dated for 9th November. So 30 days date meaning 30 days from the date mentioned in the draft, and the draft has been dated for 9th November. So there are also, even if there is not clearly stated, you have the information to calculate the maturity date, where they say draft is dated for 9th November and it's valid by 30 days from the given date. Now A, C and D have clearly mentioned the maturity or have all the necessary information for you to clearly calculate the maturity date. But if you take answer B, the maturity date is unclear. Now if you go through the definition for bill of lading, they clearly tell you that bill of lading is a document that is payable on demand or at a specific future date. Now this future date should be specific. Even if you read ISBP 745, let me go to that. When you go through ISBP 745, they clearly state that when a credit requires a draft to be drawn at a tenor other than sight or for a certain period after sight, it must be possible to establish the maturity date from the data in the draft itself. So, the details regarding to the maturity should be clearly mentioned on the draft itself. But here, if you see this particular question, if you just have the draft and the draft says and the draft says 30 days from bill of lading date, do you have the information of when the bill of lading date is on the draft itself? No, it seems that it's not mentioned. So that clause cannot be accepted. But remember, if the answer says 30 days from bill of lading date and the bill of lading date is 9th November, if these details are given on the draft, then it can be accepted. But here, they have left you hanging, not given the full information. So here, the tenor that cannot be mentioned on the draft is answer B, 30 days from bill of lading date. If you like our videos and you want to support us, please feel free to contribute to our Buy Me a Coffee link. The link is given in the description box below. Do support us to make more such videos. Moving to question number 19, it's a very straightforward question. Which of the following documents must be signed? So out of the 4 answers given here, we clearly know there is no particular requirement to sign a packing list. There is no particular requirement to sign a weight specification. And of course, the UCP 600 clearly tells you that a commercial invoice need not be signed. That, of course, directly leads you to the answer, which is certificate of origin. If you refer the ISBP 745, that also tells you that when a certificate, certification, declaration, or a statement is required by the credit, such document must be signed. So, of course, here it's a certificate of origination. So, since it's a certificate, it must be signed. Moving to question number 20. A credit requires an invoice without further definition. Which of the following must be considered a discrepancy? Answer A says presentation of a document identified as a tax invoice. Now, ISBP 745 clearly tells us the following regarding title of invoice. It tells us when a credit requires presentation of an invoice without further description, this will be satisfied by the presentation of any type of invoice. The title can say commercial invoice, customs invoice, tax invoice, final invoice, or even consular invoice. However, an invoice is not to be identified as provisional or pro forma or the like. Now, for that matter, for additional clarity, they also go on to say, even if the credit asks you to present a commercial invoice and you still go ahead and present a document which says invoice, but the document says that it's been issued for tax purposes, still that document can be accepted. So, of course, answer A is not a discrepancy. Answer B says an invoice which is not signed. So, of course, we know Article 18 of UCP 600 tells you that a commercial invoice need not be signed. Answer C says an invoice made out in a different currency to the credit. Now, Article 18 says the commercial invoice must be made out in the same currency as the credit. So that is a discrepancy, definite discrepancy. Answer D says an invoice issued for an amount in excess for that permitted by the credit. Article 18 of UCP 600 clearly tells us that a nominated bank acting on the nomination, a confirming bank, or the issuing bank may accept a commercial invoice issued for an amount in excess of the amount permitted by the credit. So that is, of course, it's the discretion of the bank, but it's not a definite discrepancy. So out of the four given here, what is a definite discrepancy that must be considered? Of course, that is clearly answer C, where invoice made out in a different currency to the credit. So that is it for this video. In another follow-up video, I will cover a set of questions that can be probable questions for your CDCS exams or for your IBSL exams. Thank you so much for listening in. Subscribe to Learning Business for more videos.